It's no secret that Bitcoin treasury companies are the cool kid on the block right now. It seems like there's a new Bitcoin treasury company every week, and investors can't get their hands on enough shares of these companies. This year alone, Metaplanet stock is up by more than 300%, and of course, everybody's familiar with MicroStrategy, now known as Strategy, which is up more than 2,900%. over the last 5 years. Now, all of that is great. That's fantastic. I congratulate everybody that has seen outsized returns in these Bitcoin treasury companies, but there are some holes to this that I don't think the markets are paying attention to. Eventually, the music stops. If you were to ask a shareholder of Metaplanet why they own the stock, they would likely say because the sucker's going up. And if you ask somebody that owns MicroStrategy, they'd say the exact same thing. And as I'll discuss and show you in this video, it's because that is exactly what these companies' management teams are selling. They're selling historical stock price gains and lottery tickets to investors, not operating leverage, not anything with any fundamental value, not anything with any staying power. And that's the big problem here. Now, if you were to ask the same shareholder, what exactly does MicroStrategy do for you? What exactly does Metaplanet do? They'd say, well, they buy Bitcoin. Then the next natural question for me to them is, what makes MicroStrategy, what makes Metaplanet's Bitcoin worth more than the Bitcoin you could go out and buy on the spot markets yourself? Because you can do that. You can go out and buy one full Bitcoin on Coinbase for $100,000, or you can plow your $100,000 into MicroStrategy or Metaplanet stock and come up with way less Bitcoin ownership through their balance sheet at the end of the day. Why would you do that? If Bitcoin is the most important asset at the end of the day, why are you settling for less? Now, just to show you the math on this, I'll use $100,000 per Bitcoin as an example because it's simple and it's relatively close to what the price of Bitcoin is today. If I have $100,000 to my name, I can go out and buy one full Bitcoin for that $100,000 and I'll own 1.0 Bitcoin. Or I can opt to buy Metaplanet shares. And to find how much Bitcoin I would own through Metaplanet's balance sheet, all we have to do is take their amount of Bitcoin holdings and divide it by their amount of shares outstanding and figure out, with my $100,000, how many shares of Metaplanet stock I can buy. I've done the math here. I could buy 13,793 shares of Metaplanet stock, which would give me just 0.18 Bitcoin ownership through Metaplanet's balance sheet. So that's a big problem. That's confusing to me. I just spent all of last week down in Las Vegas at the Bitcoin conference. I am a Bitcoin maximalist. I buy Bitcoin every hour of every day through an application called River. I'll leave a link in the description down below. Not a sponsor, just a great company. I buy Bitcoin every hour of every day without any fees and at a company that verifies their proof of reserves. And I own all of that Bitcoin. I'm not settling for less Bitcoin for my money. But when I buy Metaplanet or MicroStrategy stock, I'm settling for less Bitcoin ownership through that company's balance sheet. And if at the end of the day, Bitcoin is the most important asset, why are we opting for less Bitcoin ownership? Now, your more in tune Metaplanet and MicroStrategy shareholders will use this opportunity to say, well, it's because Bitcoin per share is going to rise as the company continues to raise money and buy more Bitcoin, add more Bitcoin to their balance sheet. And right now, I did the math as well. Bitcoin per share, if you were to buy Metaplanet stock, is 0.00001298. It goes on for a little bit. It's essentially a very, very small decimal. And they're right. If Metaplanet goes out there and sells shares today, they will increase Bitcoin per share, which means my Bitcoin ownership should theoretically rise over time as new dollars come into the company and invest in the company. I'll just show you the math on this really quick. Let's say we go out there and we raise $1 billion. To raise $1 billion at $7.25 per share, you would have to add 138 million shares to the total shares outstanding, and your new total shares outstanding would rise to over 738 million shares. Now, you also are going to be able to add 10,000 Bitcoin to the balance sheet. And the company's new Bitcoin HODL balance will be 17,800 Bitcoin, which means their Bitcoin per share rose, and that's where you get Bitcoin yield. And my Bitcoin ownership at Metaplanet all of a sudden rose to 0.33 Bitcoin. You may be asking, what kind of dark magic is this? How does this work? It's all to do with the multiple to the net asset value that this company, Metaplanet, is trading at today. Because they're trading at a multiple of 5.1, they're able to sell shares of their company at a premium to their total assets on their balance sheet. And, well, they're able to buy Bitcoin, which increases their Bitcoin per share because that multiple exists. The problem with this is as you dilute shareholders more and more, that multiple to net asset value, although you're increasing your Bitcoin per share, the multiple gets crunched down, which means the management team has to find a way to prop up that multiple to net asset value or increase it further in order for their dilution to make an impact. Otherwise, you literally will never get over 1.0 Bitcoin ownership through your shares at the company. The company could dilute an infinite amount of money at a multiple to net asset value of 1, which is what it would reach if dilution is endless and the management team fails to keep that MNAV propped up. You could get 2.9999999 Bitcoin through your shares of the company, but you would never overcome 1.0. That's why multiple to NAV is so important, and it's so focused on by shareholders and management teams in this space. Now, if you're wondering why that multiple to net asset value exists, it's a great question, and Metaplanet and MicroStrategy try to address this head on in their investor presentations. They actually dedicate full slides to this. I would encourage you to go check them out. I'll highlight them here today. Factors that drive MNAV higher. This is from Metaplanet's most recent investor presentation. They say that part of it is high expected Bitcoin yield. The other part of it is expectations of Bitcoin price appreciation. But that really doesn't make much sense either, because if I were to go out and buy one whole Bitcoin with my $100,000, I'm going to see the same price appreciation on my Bitcoin that Metaplanet will, and I'm actually going to own more Bitcoin at the start of the day. So my actual dollar return is going to be higher than what Metaplanet's dollar return, or what my Bitcoin via Metaplanet's balance sheet would return on a dollar value. But I'm going to tell you today that everything Metaplanet is doing to explain the multiple to the net asset value, and everything MicroStrategy is doing to explain the multiple to the net asset value, is a ton of crap. And hear me out. Here's another slide that Metaplanet uses to explain their premium to net asset value. The very first bullet point is how it highlights how they generated 170% Bitcoin yield year to date so far in 2025. They also highlight how they're the best performing public equity in Japan since adopting its Bitcoin strategy. And I actually think in 2024, Metaplanet was the best performing stock in the world. They highlight Bitcoin yield again, saying that they have the ability to boost that yield through debt leverage in the future. And then they highlight it yet again, long-term potential to generate Bitcoin yield in perpetuity via issuance of zero coupon, convertible bonds, and perpetual preferred equity. Here's the problem with justifying a multiple to net asset value because of Bitcoin yield. We just highlighted that Bitcoin yield is only possible if a multiple to the net asset value exists. So those are two different variables that are dependent on each other. A multiple to the NAV is dependent on, well, our future and past Bitcoin yield. And our past and future Bitcoin yield is dependent on the multiple to net asset value. So clearly, that is not the answer. They're selling you a load of crap. We're missing a variable here. And what's that variable? It's hype. They are selling you lottery tickets. They're selling you historical stock price gains in order to generate hype to keep this flywheel going. I am not going to take anything away from Michael Saylor or MicroStrategy or Metaplanet's salesmanship, but that's exactly what they're doing. They're great salesmen. They're selling you on hype so that they can prop up their multiple to net asset value, so that they can generate Bitcoin yield that they can point to and generate hype from. Both MicroStrategy and Metaplanet highlight their previous stock price performance in their investor presentations, and they make a very, very big deal out of it. MicroStrategy, for example, says they've outperformed all major assets in S&P 500 stocks, which is absolutely true. Up 2,887% compared to Bitcoin being up 692% and Nvidia being up 874%. Then they highlight how MicroStrategy has outperformed over the last 12 months, every single equity. And then they highlight how MicroStrategy has outperformed over the last 3 months, every single equity. And then they highlight their annualized return of 105% and how that's number one versus the top S&P 500 companies. So I'm going to draw a little bit of a chart and put it up on the screen now. I'm not the greatest artist in the world, so cut me some slack. But this is really what's going on. At the top of the funnel, it's stock hype. And Michael Saylor and Metaplanet and all these Bitcoin treasury companies have done a great job of selling Bitcoin yield as this tremendous new breakthrough in financing. Because there's hype surrounding their stock, they trade at a multiple to their NAV. And because they trade at a multiple to their NAV, they can generate Bitcoin yield. And then they just point to the Bitcoin yield to generate more stock hype. It is a flywheel effect. So let me ask you a question. What exactly does MicroStrategy or Metaplanet do for you? At this point in the video, we've narrowed it down to, well, they basically sell me a lottery ticket. They say that because shareholders have gotten rich in the past, they're going to get rich again in the future. And if you buy today, you're going to get rich. But there's a problem with that. And again, this isn't taking anything away from the people that have made a lot of money. And, I'm not saying that this train is going to stop in its tracks today. This could go on for a very long time. But the problem with that is you can sell historical stock price performance to prospective investors, and you can keep the flywheel going. But eventually the music stops if you don't have operating leverage at your company. I'm pretty sure it was Peter Lynch who is famous for saying, "You are buying companies, not lottery tickets." If your mindset is that you're buying lottery tickets and get-rich-quick schemes like, unfortunately, MicroStrategy's management team is selling to you and Metaplanet's management team is selling to you, more than likely, you're going to get destroyed at the end of the day because the music is going to stop because they're really not generating any sort of value for you. So long as my Bitcoin ownership via Metaplanet's balance sheet doesn't rise to 1.0 or more, I would be better off. My money would go further just going out and buying one full Bitcoin. You can do the math on your own, but it is an ungodly amount of money that these companies have to raise in order to get your Bitcoin ownership above that 1.0 mark. We just raised $1 billion at $7.25. Sure, we crunched the multiple to the net asset value slightly by selling shares of the company, but at the end of the day, we raised $1 billion and it only raised my Bitcoin ownership from 0.18 to 0.33. And this is the problem. These companies have to raise more money every single time they raise money in order for it to continue to make the same impact to your Bitcoin ownership through the company's balance sheet. And the investor that comes in tomorrow after you buy your shares, they're starting back in the first inning. Sure, Metaplanet shareholders that bought early in 2024 or MicroStrategy shareholders that bought when they first adopted their Bitcoin treasury strategy, they've done extremely well. And I'll venture out and say that their Bitcoin ownership through the company has risen to above 1.0 for their money that they put into the company. It's been a worthwhile investment for them. But that has happened on the heels of a multiple to net asset value and stock hype and Michael Saylor selling additional shares of the company and raising money via convertible bonds and going further out on the risk and volatility spectrum in order for them to rake in more investment dollars to prop up your Bitcoin ownership. And again, the longer this goes on, the harder it gets to make a difference on your Bitcoin ownership or your Bitcoin per share at the company. I actually challenged one of the more prominent Metaplanet shareholders on X with this data. And his response to me was, "I think you fundamentally don't understand. Why would you need 1 Bitcoin per share? ETFs don't have 1 Bitcoin per share." And then he says, maybe this helps. Metaplanet was up 2,400% in 2024, and Bitcoin was up 120%. They went from $20 million in market cap to having $600 million worth of Bitcoin. If you don't see the opportunity there, you shouldn't be commenting on finance. And this is so ironic to me, and I say it in my reply. Respectfully, if you're using previous stock price returns to decide what future stock price returns will be, you are actually the individual that shouldn't be commenting in finance. Everybody knows that you should never use historical returns to decide what your future returns are going to be when you buy a stock. That's a big mistake, and more times than not, you're going to lose money with that thesis. And the first part of my reply is equally as important. If Bitcoin is the most important asset at the end of the day, don't you want to deploy your money in a manner that nets you the most Bitcoin? If you're never made whole at 1.0 Bitcoin or greater, why would you pay a premium for less Bitcoin ownership via Metaplanet's balance sheet? It fundamentally does not make sense. Another thing that we need to pay attention to that the markets really aren't thinking about right now is the fact that a company like MicroStrategy in particular continues to leverage up their balance sheet with more and more debt, and they continue to issue new classes of preferred stock that have dividends attached to them. AKA, they are increasing the cash commitments of the company, and MicroStrategy itself doesn't have any cash flow outside of their ATM dilution, outside of diluting shareholders and bringing in more debt. That is their only cash flow. And at some point in the future, that is going to be problematic. Just as an example, we're looking at MicroStrategy's most recent quarterly report, and they break down all of the convertible notes they have sitting on their balance sheet. I want to highlight the 2029 convertible notes here with $3 billion of principal. The conversion price on these 2029 notes is $672 per share. If we look at MicroStrategy stock, it's at $378 right now, despite Bitcoin being at or around all-time highs right now. And MicroStrategy is down significantly from their all-time highs. So that alone proves that Bitcoin can perform really well. Bitcoin can stay flat for the next 5 years, and MicroStrategy might just also stay flat or even go red if Bitcoin performs well. That is in the range of outcomes. And if MicroStrategy stock doesn't rise above that level of $672 by the time these notes mature, all of a sudden, MicroStrategy is going to have to come up with $3 billion from somewhere to pay back these note holders. Obviously, if MicroStrategy stock is above $672, the note holders are going to convert their debt into equity because it's essentially a free call option. But if MicroStrategy stock doesn't rise to $672 per share, MicroStrategy doesn't make any money. They have no cash flow outside of dilution and new debt. That becomes problematic because they have to pay back this principal rather than converting it to equity. If they were to issue $3 billion worth of shares today at $378 per share, that would be much more harmful to MicroStrategy's multiple to their net asset value than if they were able to convert this debt or dilute shareholders at $672 if MicroStrategy stock rises to that point. The bottom line here, though, is dilution is not a business plan that has staying power. You cannot keep the lights on forever if your sole cash flows come from dilution and debt, because eventually the economy takes a turn. Eventually, you've tapped out all of the money that's out there all over the risk spectrum, and you fail to raise more money to buy more Bitcoin. So you're left with two options at the end of the day. Sell your Bitcoin, which makes MicroStrategy worthless, because if they're selling their Bitcoin, that defeats the purpose of what MicroStrategy's been selling to investors for the last 5 years. Or they have endless dilution to pay their debt obligations, and they have endless dilution to pay their preferred stock dividends. Now, I know there's going to be MicroStrategy experts out there that say, well, technically MicroStrategy doesn't have to pay those dividends. Technically, they don't have to pay them, and technically, yes, that's true, but you know what happens if MicroStrategy doesn't pay their dividends on their preferred shares? Well, the value of those preferred shares crumble, which makes the value of MicroStrategy stock crumble, which makes dilution much more harmful for shareholders. And at the end of the day, without operations, without operating leverage, the music's going to stop. I put out a tweet the other day highlighting the Bitcoin Treasury company that I own and I love. CleanSpark is a Bitcoin mining company that has delivered Bitcoin yield of 39.7% to shareholders since November of last year. Their Bitcoin hodl has increased 34% from 9,297 to 12,502, while shares outstanding have actually decreased 3.7% from 292 million to 281 million. CleanSpark, ticker symbol CLSK, is the only company delivering Bitcoin yield through operating leverage. They are the only company delivering Bitcoin yield without dilution. The only company delivering Bitcoin yield via reducing shares outstanding, without increasing their cash commitments, without relying on hype as a stock selling sales pitch, without leveraging up their balance sheet and increasing risk to shareholders. CleanSpark's argument to tout Bitcoin yield would probably be the strongest of any company on earth. But here's the catch. CleanSpark doesn't use Bitcoin yield as a sales pitch because they're not selling their company as a lottery ticket like Metaplanet and MicroStrategy are. Selling their company as a lottery ticket would be an insult to what the company is accomplishing and what they can accomplish in the future at a company level and for shareholders. CleanSpark, as of today, is acquiring Bitcoin for less than spot price because they are mining the Bitcoin. They have some 200,000 Bitcoin mining rigs. So think of your local football stadium. Fill every chair in that stadium with 2 Bitcoin mining rigs, maybe 2.5 Bitcoin mining rigs, and you'd come close to the amount of computing that CleanSpark has at their company. And better yet, CleanSpark has invested in real estate, data centers, and Bitcoin. They also have very attractive power agreements that retain value no matter what. CleanSpark has operating leverage, which makes it make sense to actually pay a premium for their company. Metaplanet, MicroStrategy, that's non-existent. They're selling you Bitcoin yield, which is reliant on MNAV, which is reliant on stock hype and generating stock hype. I sincerely hope everybody that's watching this video that may be a Metaplanet or MicroStrategy shareholder makes a ton of money. My goal here is not to bet against the company. A lot of people are going to say, okay, well then short the company. No, I'm not going to short the company because I believe in Bitcoin. But Bitcoin is greater than any one individual. Bitcoin is greater than Michael Saylor. Bitcoin is greater than any bad actor in the space. I just wanted to communicate to everybody that this isn't quite what it's made up to be. This isn't an infallible strategy. There's no such thing as free money. There's no such thing as printing more Bitcoin endlessly. Maybe it's shareholders recognizing that they literally will need infinite dilution to be made whole on their money, to be made whole and own as much Bitcoin via these companies' balance sheets as they would if they were just to go out in the spot markets and buy their own Bitcoin. Maybe it's MicroStrategy, one of those convertible notes. All of a sudden, well, they either have to sell their Bitcoin or sell $3 billion worth of shares at what they would deem as low valuations that makes investors and shareholders realize, oh, this is all just built on hype of investors. Hype can last a very long time, but it never lasts forever.